Hey, this is Chris, and in this video I'm going to be talking about ethical ETFs and how we pick the best, or what we believe to be the best ethical ETFs for the StockSpot portfolios. I'm going to be looking at what is ethical investing, what are the criteria we used, and then talking about some of the ASX listed ETFs that invest in a sustainable way and some of the metrics you might want to consider when picking one for your own portfolio. So first of all, what is ethical investing? Well, ethical, or sometimes sustainable, or ESG investing refers to an investing strategy that aims to generate long-term wealth by investing into companies that demonstrate positive environmental, social, and governance impact. Ethical or sustainable investing uses often a framework of omitting companies that don't meet certain criteria and adding extra weight to companies that do meet different environmental or social criteria in order to work out what companies are actually inside the index. For example, negative screening or removing of companies might happen for industries such as tobacco, weapons manufacturing, or mining, where there is a lot of carbon emissions being generated. Or on the other hand, positive screens may put more emphasis or more weight on companies that are seen to be doing positive environmental or social activities, such as generating renewable energy, recycling, or creating energy efficient transport. And there's often, you'll see within ESG ETFs, an aim to align with the UN 17 Sustainable Development Goals. Now these days there's a whole bunch of different ESG ETFs listed on the ASX. In this video I'm only going to be looking at the ones tracking Australian shares, but there's also a bunch now that look at global shares. And what we've seen broadly across both of them is huge growth over the last few years. So just over 2021 alone, we saw the ESG ETFs in Australia double in size from about $1.7 billion being managed to $3.3 billion. So a huge jump in assets under management. And I'm going to be looking at two of the key metrics that our clients told us are important to them when identifying the best ESG ETFs for their portfolios. So on the ASX there is now 7 different ESG or sustainable focused ETFs that track Australian shares. 5 of them are more indexed focused ETFs and 2 are active strategies. So there's a broad range to choose from. When we asked our clients what's important for them when selecting an ESG ETF, the 2 things that really came up more often than others was carbon emissions, and then also the percentage of revenue that was coming from either green energy versus brown thermal coal style energy. And so I've looked at these 7 ETFs on those factors, and I want to talk a little bit about where they differ and where they're similar. So first of all, on the carbon emissions. Now, compared to the overall ASX 200 or ASX 300 index, what you'll notice is most of these ESG ETFs do allow investors to access companies with a smaller carbon footprint. But that really varies quite substantially. And so what we see is with the S&P ETF, that is the ASX E200 ETF, it has the smallest reduction in its carbon footprint of only about 20% of the carbon's been emitted from this ETF. And that's actually because this ETF, more closely than the others, actually just tracks the broad index. It still maintains quite a substantial mining exposure. And so if you're looking for an ETF that actually tracks the index quite closely and has only made small adjustments to the components, then this might be the one for you. However, if you're looking for a bigger carbon impact, it's probably not going to be right because its impact is relatively minor. Now, looking on the other side of the spectrum, what we see is there's a bunch of these index ETFs that have reduced their carbon footprint by somewhere between 75 to 95%, which is pretty impressive. And these are the ones that we focused on for the StockSpot portfolios because it was something that was important to our clients. The ones that have the biggest reduction in carbon footprint, we found to be the Russell ETF, RARI, and then the BetaShares ESG ETF, which is FAIR. And we're going to put in a link below a link to find out more about the actual carbon reductions of each of these ETFs in the portfolios, so you can compare all of them when you're looking at your own investments. The other metric a lot of our clients said was important to them was how much revenue are these ESG ETFs generating from green energy, sustainable energy versus brown energy. And so we've had a look at the ETFs and compared them across this metric as well. And what we find is compared to the overall index, The ETF that matches most closely is actually just the E200 ETF, which is the ethical ETF provided by S&P. It hasn't actually led to a huge reduction in brown energy or a big increase in green energy. So again, similar to carbon emissions, it tracks the overall index most closely, but isn't likely to have the biggest environmental impact of all the different ETFs available. On the other side, once again, RARI, which is the Russell ETF, as well as FAIR, which is the BetaShares Sustainable ETF, have the biggest impact. So from a green energy perspective, those two have tripled the amount of green energy revenue within the portfolio and reduced the brown energy by either 70% for RARI or 100% for FAIR. And so really these two are on the other extreme in terms of having a very material difference versus the index in terms of their allocation to green versus brown energy companies. If that's important for you, and for a lot of our clients it was, these are the two ETFs you're probably looking for. We include RARI as one of the theme options for our clients, and then we include FAIR as the main ETF for exposure to Australian shares within our sustainable portfolios. So once again, if you want to see a complete comparison of all the different sustainable ETFs, how much they emit in terms of carbon, as well as their green energy versus brown energy, check out the links below and you can compare them all in one of our blogs. If you like this video or you want to see others comparing different ETFs, please subscribe below and we'll keep on producing great content like this to help you with your portfolio.